Today's a stock analysis blitz for Mirriad advertising. Thanks a lot to my subscriber Christopher Brooks, who suggested I took a look at this one. Please remember that I do these videos just for fun as a hobby and always seek help from a professional financial advisor before making any investment decisions. So Mirriad advertising develop and sell in-content advertising to marketing companies. If you go onto Mirriad's YouTube page, they have an interesting video that explains how it works. So with in-content advertising, you use AI to analyze what's going on in film footage. And then as you can see, as I just replayed it, it identifies areas where it can place an advert really discreetly into the actual film. And then that advertising is then matched using AI to fit whatever's going on in the video at that particular point of time. So here we get another example. So there's another example there where it identified here and then placed an advert there really discreetly into the film. So obviously that's a really exciting new technology, and especially when you consider how it is now with YouTube videos, but also most media, which is now mostly through the internet. Clear how that's a very promising technology, because at the moment most adverts are played to interrupt the video you watch or before you can even watch it. So I click on this video I want to watch,
For 2023,
and these
I'm exposing fake games, and this is top 1. Okay,
annoying
so I downloaded the game, and this is
adverts
it.
come
I'm
up that are
actually
just so
playing it.
irritating.
Oh, this
Everyone
is
hates
actually like
it.
the ads.
Then you have to click
Okay,
on
we're not doing
skip
very
ad
good though.
What's up,
in order to
everyone?
then watch your video. So this in-content advert is a way of advertising without people getting annoyed and then using things like ad blockers and stuff to the cost of the advertisers. So it's a really exciting product they do. And when I first saw that, I was amazed with this stock and thinking, wow, I really want to get into this. But then I looked at their annual report and their income and loss statement, and we see that they've only been making about 2 million a year in revenue. And yet their running costs, their admin expenses, are now up to about 14 million. So we're looking at a burn rate of about 11 million here. In their latest RNS, they said that revenues had actually dropped from 2 million to 1.5 million, and they had improved their cash burn. But I've worked out we're probably still looking at 8.5 million cash burn a year, and so they've only got. So according to their January RNS, they only had 11.3 million in the bank at the end of 2022, and they've said they're actually going to run out of money by the third quarter this year. You can see how the stock price pumped along with all the other easy money back in the money printing era. Back in these extravagant times, they were able to raise capital so that they had a decent amount of money in the coffers to help keep them going, even though they were operating at a massive cash burn. But of course, now in the current economic environment, it's not easy to raise capital anymore, especially on these kind of stocks. So now they really are in trouble. And so they released an RNS about a month ago where they essentially say, they call it a strategic review, but basically they are essentially hoisting a for sale sign above the company. They talk about trying to raise additional equity capital, but they say they're seeking a strategic partner, which basically means someone buys a lot of their shares. Talking about a formal sale process where basically they just get taken over by another company. I've highlighted from that RNS, they say that their revenue was only 1.5 million for the year end 2022, and they only have 11.3 million in cash, and they've only got enough cash to last until the third quarter of 2023. So to me, this hoisting up of the for sale sign, to me, it just appears to be more an act of desperation, really, than anything I'd hold on to as promising. We have here the net income history, which really has a all-time loser profile. And then we see here with their market cap, they had this, like so many other companies, when the government was printing all that money a few years ago, we have this massive boom, bubble and bust. Their price to book now is very cheap at 0.6, but that obviously reflects the fact that they're under high risk at the moment. So Mirriad advertising is a great example to me of one of those small companies that have such a promising and really exciting idea. But if you just spent 10 minutes going through their annual report and having a look at and reading their balance sheet, it's immediately obvious that it's not a good idea to invest in them. But of course, so many investors never bother to even put in a couple of hours work. They tend to just go in on an idea, a look at the website, and maybe checking out what people are saying on the chat forums. So, Mirriad advertising, a clear no-go for me. Please read the disclaimer. Remember that prices can go down as well as up.